Alright guys, so let's talk about global currencies today and how one currency is going up while the other is going down. Yes, we have to talk about the dollar and the Chinese RMB today because as one starts to fall and the other rises, it starts to reshape the entire global economy. Now it's important to realize that the dominant system, which is the USD, is actively getting dismantled by decades of mismanagement. Now Biden confiscating Russian assets was a stupid move. Now, Trump striking Iran looks tough, but it shows that the US is willing to use force to solve geopolitical issues. And if military force can be used so indiscriminately, you best believe economic weapons will be used as well. And the best way to help the US as a whole is to prevent a collapse at all costs. Now, that sounds simple enough, but there's always a dangerous side effect when dealing with monetary policy, which is what Trump wants to tinker with. In a really risky move, Trump is moving to name the new Fed chair early, which obviously means one thing: interest rate cuts are coming. Now, it's no surprise that the dollar crashed further. For over 6 months, Trump has been trying, literally scolding Powell for him to cut rates, but Powell isn't doing so because inflation is still a big problem. Now, during a conference in the NATO summit, Trump has already shortlisted 3 people, and no matter who he's chosen, they will likely start to slam rates down despite persistent inflation from the tariff war. So, what exactly happens when you do that? Borrowing costs might come down in the US, some consumers can spend more, and US companies can borrow more as well. However, a side effect is that the capital coming into the US economy will be rewarded less. So, you have fewer dollars going out into the global economy from the tariffs, plus now lower interest rates are taking away an incentive from investors outside the US. We can expect this to plunge the dollar's strength, and this is called a structural or fundamental change to the key pillars of the dollar. And boy, does it have a lot of room left to fall. Now, sure, the dollar is the weakest since 2022, but it is highly possible for it to collapse even further, maybe back to the 2004 to 2014 levels. Now, when the dollar crashed and bounced around in 2008, it was because of stimulus money. An abundance of dollars removed scarcity in the marketplace, and Trump's tariffs are re-injecting that scarcity, while the Fed cuts will reduce the utility of the dollar as an investment vehicle. Fewer people buying treasury bonds equals less demand for dollars. But there's also a big misconception we need to clear here. If rates go down, doesn't that help allow domestic industries to recover? Perhaps it will, but thanks to the tariffs, two deadly effects kind of happen here. Firstly, input costs go up for manufacturers and producers, which means higher prices at the end of the day. Now, Besson is 100% convinced that companies like Walmart will eat the tariffs, but we know that is wishful thinking. They have to pass it down to consumers. As a result, people have less money to spend. The advanced retail sales are already showing the American consumer starting to crack. The main numbers show a growth slump of 0.9%. In other words, consumers are spending and they are buying less by almost a percent. Horrible for an economy driven by consumption. Now, in April, the revised sales numbers plunged by 0.1%, and that was the start of the tariffs. And this is undeniable evidence that Trump's tariff war is eroding away consumer power. People have to spend more to get less, and it's always a recipe for disaster. Remember that Besson or the Fed can't choose up the economy with funny money. Printing money right now is out of the question, and trying to jack deficit spending is really risky business. So we have prices across the board slowly creeping up. Mortgages cost more, power costs more, and gas prices, you guessed it right, they're still very high. The bare essentials of life cost more, and it's no wonder retail spending is collapsing. Now, this chart from ING is extremely telling. As a percentage of total consumer spending, the share of retail sales is dropping. After the big spike post pandemic, we are now back at 42% of total consumer spending. And the lower this goes, the worse company earnings will eventually get. 70% of the US economy is dependent on the private consumer, and government spending is also drying up. Now, it's no surprise that Trump pushed Lutnick to quickly sign the China deal because the US economy desperately needs to stabilize and remove uncertainty.
Do you really have anybody of any interest? Well, We just signed with China yesterday, right? Just signed with China. We have everybody. We're not going to make deals with everybody. Some we're just going to send them a letter, say, thank you very much. You're going to pay 25, 35, 45%.
Now, when we look at the US economy, it's important to look at the facts here. Trump is making a tremendous gamble with his tariff war. Either it will work or crash and burn. And if the economy materially weakens further, so will the dollar. And this will spook out international investors where currency effects do matter. Now, the revised number for Q1 GDP is out and the plunge was worse than expected. The US economy shrunk by 0.5%, making it the biggest contraction in modern history. And this sandwiches Washington in a very difficult position. If the US consumer is breaking down to revive the economy, America has to export more to the world. Pretty obvious, right? But how can that be possible if prices are higher, thanks to input costs going up as well? And I think we can all see the big contradiction here. The US merchandise trade deficit is widening once again. US exporters are selling less stuff to the world, especially when it comes to exported goods. Now, May exports collapsed by 5.2% in a very sharp turn. Industrial supplies are just not being sold off. Even US crude oil exports are dropping. And this is what happens in a trade war. Countries don't need to counter tariff you, they simply stop buying your products to hit your manufacturing economy. And the only way to compensate for this is for the dollar to come down further. So don't be surprised if the dollar plunges another 5 or even 10% until we reach a new equilibrium. For US investors, it probably doesn't mean much, but for international money, this means a whole lot. While the dollar could start to fall like a bag of rocks, China is making big moves to take the chance. The tariff war didn't just open a can of worms, it's allowing China to de-dollarize the world in record time. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Now, this is horrific because China's exports are growing while the US is dropping. There's already less incentives to hold dollars, but Beijing is going to ramp up the pain in this financial domain. China's moves to globalize the RMB includes easing capital controls, expanding cross-border payment systems, and launching new financial products. Now, the end goal, telling international investors everywhere to buy Chinese investment instruments. And obviously, those aren't priced in dollars, but in the RMB instead. So every dollar that flows into Chinese stocks, into Chinese bonds, their instruments, is a dollar that isn't going into US treasuries. That's a really tough problem when you need every single dollar possible to keep bond yields as low as possible. And let's take a closer look at the trade situation between the Chinese yuan and the US dollar. And without a doubt, especially with the tariff war, China will eventually catch up and surpass the US economy, not just in triple P terms, parity terms, but in absolute GDP terms as well. It may be 5, 10, or 20 years, but it will happen. And at this rate, it's a guarantee. And the trend of currencies used will only get more and more pronounced. As it stands, China's cross-border settlement is predominantly done in their local currency. 52% of transactions are done in the RMB, and around 5% is done in other currencies like the euro or the ruble. But just look at the big plunge in dollar transactions over the last 15 years. It's simply phenomenal. The dollar share went from over 82% to just 43%, which is an enormous drop by any measure. And it's important to understand the three pivot points that caused China to de-dollarize their trade. Now, the first was in 2010, and it was after the big real estate bubble collapse. We all remember what happened then. The US printed nearly $1 trillion through TARP to save the economy. And the same thing happened in 2020. To rescue the economy from the pandemic, the Federal Reserve printed trillions and added nearly 5 trillion to their balance sheet. And this caused the value of dollar holdings to drop and made the Chinese really wonder. All the dollars I'm holding are at the mercy of US monetary policy. And let's not even talk about sanctions, right? In 2022, Biden confiscated Russia's assets, and this caused the Chinese to dump their holdings of US bonds even more. As such, transacting in dollars wasn't very necessary anymore. There are many ways China is trying to break dollar hegemony, and most of it simply is counter-attacking Trump's own trade war. It's not that China is a genius and inventing new moves every day. It's just that Trump gave too many openings with his haphazard trade war. Trump is inventing new stupid moves every day. And it's the reason why Lutnick is rushing to sign trade deals beyond just the US-China trade truce. Now, 10 more by becoming, that sounds great, but might it be already too late? Trust is being severely diluted like never before, and China is playing one of the biggest cards to grab money away from the US. They are using the power of gold. Now, for the first time ever, China has expanded the Shanghai Gold Exchange outside of the mainland. There will be two new contracts and a physical bullion vault in Hong Kong. Now, gold is trust and gold is money, and there's simply no better way to grab money from treasury holders than to offer new gold products to the world. And because the vault is in Hong Kong, which is a financial hub, investors can have a sense of peace. They can put in and take out money freely. And more importantly, it's outside the jurisdiction of the US. And imagine you're a Middle Eastern or Asian country, or you're part of BRICS. Well, this makes complete sense to you now. You want to diversify your holdings away from Western markets, and just remember what happened to the Russian assets for a memory jog, right? And right now, gold trading in Shanghai in May has hit only $10.5 billion. The LBMA in London is almost 14 times more at 140 billion. But that doesn't mean it'll stay this way forever. Now that China has opened the doors to their gold market, we can expect London's market share to collapse over the next few years because China has yet another big advantage the West doesn't have. They are the world's top producer and consumer of gold, physical realities that no one can deny and no country can simply copy. So the amount of volume can dwarf the LBMA in time, especially if the G7 continues with their approach. Guys, the grounds are literally shifting beneath our feet. The US has locked themselves into a very untenable position with the tariff war. They have built a fortress to isolate themselves. Meanwhile, China is fluid and they have the freedom of movement around the world. They are more mobile and they have a realistic understanding of their environment. But the US is still trapped in fantasy land, and that won't really end well. But let me know what you think. Can Trump save the dollar, or will China dismantle it even further? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.